All right, fantastic. Welcome to Coffee with Marcus and Mark, the number one stock market show on Spotify and one of the most popular market updates on YouTube. In this show, we're going to talk to you about what's happening in the markets and how we are trading it in. Today is Wednesday, April 5th, and stocks are still lower. So the Dow and the S&P are snapping their four-day win streak. Oil prices are spiking, gold prices are spiking, and this morning we had more unemployment data coming out. So we'll take a look at this and see how it affects the markets, and also we'll show you how we are trading it. By the way, if this is your first time here, I'm Markus Heitkoetter. This super smart guy is my head coach, Markus, and we're real traders who trade live accounts. So as you can imagine, we have a lot of trading experience. And we're telling you like it is. So if you're here looking for some honest insights into the fascinating world of trading, you are in the right place. And wow, this is definitely an interesting week, Mark, isn't it? Well, if you're talking, I can't hear you. It says the guest had muted themselves. And this is how a live show is done. So Mark has somehow muted himself. So I'll keep talking until he's unmuted again. So as you can see, after we had this day where we had the banking crisis scare, markets have been on a tear, moving higher. But then yesterday, snapping a four-day losing streak, and this morning, even moving lower a little bit more. So what is happening in the market? What is causing this? Well, in order to do this, we need to take a look at the economic calendar. And this week, it is all about jobs, jobs, jobs. So the big jobs report is coming out on Friday, which is super odd because on Friday, the markets are closed in observance of Good Friday. So until then, traders try to figure out what is the big jobs report revealing us. And yesterday we had the JOLTS jobs opening coming in below 10 million for the first time in many, 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 many months. And Mark, you're just smiling and waving here, it seems. So no idea why you're muted. You want me to kick you off and you join again? You want to try that? Might as well, right? Okay. So let me kick off Mark for a moment. He will join us here in a moment. Anyhow, so this was yesterday. The question was already, okay, did the Fed go too far raising interest rates? We have now a weakening job market, and there is Mark joining us again. Seeing, and it says, say something.
Hey, I'm saying
Hey,
something.
there he is. There he is. Okay,
Nice.
fantastic.
The
So
infamous reboot.
this worked.
Does
Okay.
the trick again.
That is fantastic. So glad that you're here. Yeah, I was just talking about the Joel's job opening. And then this morning, we had two more red flag reports. Let's talk about this. The ADP non-farm employment change, as well as the ISM Services PMI.
Sure. So ADP non-farm employment. So this is private companies hiring, and it was down in March, coming in below expectations. The forecast was 208,000 jobs being added. The previous month was 261,000 jobs added, but in March we had 145,000 jobs added, which was significantly lower than expected.
Yeah. So, and then also we had the ISM Services PMI coming out lower than expected.
Yeah, and I mean that's just another one that you know, as far as the reading goes, 50 is the level where we look at contraction or expansion. So we're still technically expanding in this services, but getting closer to a 50 reading. That coming in lower than expected, and also much lower than the previous month.
Yeah, and I mean, super interesting because for the past few months we had bad news is good news because it might mean that the Fed is slowing down hiking interest rates. This morning, it seems that bad news is bad news because if you look at the markets and we look at a 5 minute chart of the Nasdaq, we just see that we opened lower and have been falling ever since. So what's happening here? Why suddenly this change in mood? Why is it not like, hey, we're celebrating that the economy is slowing down because this means that the Fed is slowing down raising interest rates, which should be good for the markets?
Yeah, and the only explanation is traders are crazy.
Yeah, clearly. Clearly. Crazy, schizophrenic, and moody.
Yeah.
Right? So, yeah, because if we take a look at the CME Fed Watch tool right now, traders are factoring in a 62% probability that the Fed will keep rates the same at the next level. So, this should actually help out the markets and move the markets higher. But now it's like, okay, maybe too far, too fast. Who knows?
And uh, part of it goes back to what is priced into the market, right? Because when investors are buying stocks, they're looking at forward profits, right? What's going to happen in the future, not what's happening right now. And last year we had a lot of talk about recession and whether we'd have a soft landing or hard landing or go into a session or if we already are in a session. And a certain amount of recession expectation and whether or not we're in one or not is already priced into the market. But here we're starting to see, data that supports a weakening economy, which would be good for the Fed. But then traders can get concerned about what if it's worse, right? What if this really is bad? Inflation's coming down, but what if the economy sucks now?
Right, and this is where now traders are betting. Okay, the Fed is not keeping rates up for long, and then has to start lowering rates to avoid the economy slipping into a deep recession. And this is what right now the question is: will there be a recession? Not a recession? What will the Fed do? And this means uncertainty in the markets. That's where we see that the VIX, the fear index, is moving higher again, and uncertainty means that traders are, well, right now, taking their money out of the market.
Hey, and Marcus, I have to say, not all companies are having money taken out of the market because I saw a few S&P 500 all-time highs being made. One notably, McDonald's. Go figure. Check out a chart of McDonald's.
Yeah. So that's a daily chart of McDonald's, and you see just up, up, and away right now, even today, higher against the market trend.
So McDonald's is trading at an all-time high going back to its IPO in 1965.
Jeez.
Traders liking the idea that they're having plans to lay off some people.
Yeah, and I mean, this is where we also talked about yesterday about the cost cuttings at Google, where Google is cutting down on staplers and computers. And let's just see how Google is doing this morning. I think that it's down with the overall market, but yesterday it was actually moving higher, even though the overall market was down, because that's what traders and investors like. I mean, cost cutting, as much as this sucks, it will increase profitability.
Yeah. Hey, here's another one that just kind of, again, just blows you away. Hershey, so HSY, trading at an all-time high, going all the way back to 1972.
Holy, well, I mean, in times of stressful, I don't know about you, but when I'm stressed, I need to eat chocolate. So I understand
Chocolate, it's the
that.
flight to safety.
Right, the flight to safety. Talking about flight to safety, let's take a look at gold prices here, because gold prices are getting close also to an all-time high. Not quite there yet. The all-time high, I believe, was at 2078 or something like this.
Yeah, so we had an all-time high made in March of 2022. No, actually it was during the pandemic in 2020. I think it was August of 2020. But that close above 2000 was decisive. Just down a teeny bit right now, but it looks like gold wants to stay above 2000. That'd be my guess.
It definitely looks like it. Okay, let's also take a look at crude oil. I mean, crude oil in the news this week because we had OPEC cutting production by more than a million barrels, not dollars, a million barrels a day, and so we had this jump higher on Monday, 6.5%, and we're still trading at this elevated level. But we are now kind of almost back in this range. Let me see if I find
Yeah.
my drawing tool here, my rectangle. There we go. So we are back in the range between 70 and 80, 85-ish, something like this.
And I think that 80 level is going to be key. if we stay above 80, then we might stay at that upper range and even drift higher. But if we dip back below 80, I think we're going to get an attempted gap fill. Whether it's a full gap fill that comes quick, who knows? But I think that the 80 is the line in the sand for crude oil.
Now, let's take a look at our existing positions and also see if there's anything else to trade here today. So first of all, existing positions, CTRA, Coterra Energy, pulling back here a little bit, but still staying nicely in this upper range here because it's trading in the range between 23 and 26. I got inside at 26. My break even is at 23.34. Down today, half a percentage point, but good up there. I'm not able to sell calls right now because also this week is a short week. So therefore, premiums in options are a little bit thin. It's a little bit less than usual because we have this time value in there. And if we have a day less, then yeah, options are expiring actually tomorrow.
Yeah, that's throwing me off.
Yeah.
It just doesn't feel right. But hey, we'll see if there's an opportunity to sell calls on your CTRA position or other ones. Although I have to say that my AMD position doesn't look like I'm going to be able to sell calls this week.
Yeah, well, again, today's the last trading day of the week, and yeah, it
Look at
seems that
that
it's pulling
pullback.
back. So AMD right now down, but you have been doing great over the last 3 weeks selling calls against your existing position.
Yeah, I was able to bring down my break even $3, which I'll take. I definitely would rather AMD stay in this upper range, which right now getting below 92. It doesn't make me, want to panic and dump the trade, but gosh, I really don't want to see it dip back towards 90. I think that a pullback is healthy after such a strong rally, but come on, AMD, let's stay up here.
Yeah, come on, let's go, let's go. Same here with Google. Come on, Google, let's go. I mean, Google staying above the 100 level here, but has really a problem cracking through 106. And this morning, Google opened higher, but it's pulling back right now. So at first, I thought, okay, today is the day. Today is the day where I can sell calls against my existing position, but not yet, it seems. So Google down 0.78% yesterday, bucking the trend. Today, being dragged down with the overall market.
Yeah, were you looking at calls at the open, or I know that you're on the road right now?
Yeah, I wasn't looking at calls at the open. I thought, oh, okay. I just saw that we were opening higher, so I thought, okay, I'll give it some time. Didn't expect the pullback, but so is trading. So we'll see. I don't think that I'll be able to sell calls tomorrow, but probably next week. But let's see what happens tomorrow.
Yeah, you never know.
All right, then we have PNC Financial Services. So right now, trading towards the lower range that we have here, finding some support at 120, and we'll see. We talked about this. That's where we probably have to wait until next week when banks start reporting earnings. And I mean, at first we have the big banks, J.P. Morgan, Citi, Wells Fargo, but then followed by the regional banks, and I think that will be important
Well,
before. Yeah.
PNC is my understanding that they do report next Friday,
Oh, they do.
and ex dividend is Monday. Not this coming Monday, but the following. So I believe they report on 4/14, and then ex dividends 4/17. So if we're still holding PNC, which is likely, on Monday the 17th, we'll be entitled to $1.50 dividend.
All right, I'll take it. Yeah, I see 9 days until earnings. We can actually take a look at the earnings analysis here really quick and see what is typically happening here for PNC after they report earnings. And here we see if we look at the last 12 quarters, we see that typically the price move reaction after 7 days reporting earnings is up 8 times. So that's 66%, down 4 times. And on average, it's up 4%. When it is down, it's 5%. So I mean, this looks pretty good, and it seems that historically, 10 out of 12 times, they beat analyst expectations.
And I think that the key takeaway here, of course, anything can happen, right? But based on the past, based on the last 3 years, they tend to beat earnings. The first day tends to be slightly negative. but the 7 day reaction is positive, right? Of course, anything can happen, but I think it helps to go into earnings here because if we follow the same pattern, then and if things are down a little bit with the reaction, even though there's an earnings beat, sometimes it feels uncomfortable to stick with the trade, stick with your plan. At least based on what we've seen in the past, it tends to drift higher after that initial reaction. I think that's important information.
Yeah. So this is looking good. Yeah, I mean, I'm not too concerned going into earnings here. So today, since we have a down day, there's quite a few on the scanner, mainly though financials. And since we are already in a financial stock here in a bank, these are the ones that we're not interested because there would be a high correlation. It's almost like doubling down in one of our existing positions.
Exactly.
Yeah, the one that I'm keeping an eye on is GM because I've been trading GM General Motors over the past few weeks. I've always sold puts at the 3150 level, and I'm interested in the 3150. So today, GM down 3%. I'm keeping an eye on it and wanted to see, is there a possibility of maybe selling calls at 3150? Right now, there's not because our rules here are, I mean, at least according to our plan, that we want to get at least 30% annualized. And that's not possible right now at the 3150. So if we take a look at the 3150, let's just quickly do this. No, it's way below. It's way below the 30%. So nothing yet.
Two maybes, Marcus. I'm holding off, but Williams Sonoma, WSM, and also Macy's, I think are decent maybes if someone wants to get into a retail position.
Yeah. I think I think also keep trading a little bit light this week, especially since I'm traveling, and I do believe that we will see a very strong reaction to the jobs report on Monday. So I think this will be the big one where we also get a little bit better idea of what traders think the Fed will do if they keep interest rates the same. And I mean, there's still a long time. We still have 28 days to go, and also next week we have CPI inflation data coming out. I think this is a also very important and significant.
Yep.
All right, let's take another look here at the markets. Let's go to a 5-minute chart of the S&P 500. See where we're trading here right now. Okay, it seems that we're coming off the lows in the S&P 500. Let's take a look at the Nasdaq. Also seems right now we're coming a little bit off the lows. Let's see if markets can actually stage a little bit of an afternoon rally today. But right now, it's looking bad. Bad news today is bad news.
That is correct.
All right. Hey, if you're enjoying these market updates, do us a favor and give us a like. And also, there's a few more videos that you can watch. This way, you get a better idea of what we are trading. And if you're new to this channel, click on subscribe because this way you get a notification whenever we go live. Anyhow, so we'll see you again tomorrow.
Happy trading, everybody.